welcome to the Global View, the show where we look at ways for investors to make money beyond the ASX listed universe. I'm your host, Olivia Grace Curran. Well, US stocks tumbled on Friday on new tariff threats and worries of softening consumer demand. All of the major indexes ending in the red, the S&P 500 and Russell 2000 suffering their largest single-day percentage drop since December 18. The SIBO Volatility Index closed at its highest level since February 3rd. Every stock in the Magnificent Seven ended in negative territory, Nvidia tumbling 4.1%. The AI giant's profit report is due this week and could steer the US market's course, with investors seeking confirmation the AI-driven investment trend is intact following the DeepSeek stock sell-off. Tesla and Rivian each dropped 4.7% after the electric vehicle makers announced recalls. Shares of United Health tumbled following a Wall Street Journal report that the Department of Justice has launched an investigation into the health insurer's Medicare billing practices. Block shed more than 17% after the payment firm's fourth quarter profit fell short of estimates. Fourth quarter earnings season is in its final stretch. 425 of the companies in the S&P 500 have already reported, with 76% of them beating Wall Street expectations. US business activity nearly stalled in February amid mounting fears over tariffs on imports and deep cuts in federal government spending. Friday's report revealing US consumer sentiment dropped to a 15-month low and inflation expectations rocketed. Separately, US existing home sales dropped more than expected in January. Traders remain focused on Trump administration's plans to implement tariffs on trading partners. The president is expected to announce fresh tariffs over the next month or sooner, adding timber and forest products to previously announced plans to impose duties on imported cars, semiconductors, and pharmaceuticals. Benchmark 10-year US Treasury yields fell to a two-week low on Friday after several data releases pointed to slowing growth, leading traders to increase bets that the Federal Reserve will cut rates 2 times this year. Two-year yields fell 7.6 basis points to 4.19%, the lowest since February 6. The euro has opened higher in Asian trade today after Germany's Conservatives won its election as expected, with investors awaiting further results to see whether much-needed fiscal reform is likely. While the Aussie has dropped slightly to around 63.7 US cents. Bitcoin is sitting around 95,800 US dollars. Oil prices settled down more than $2 a barrel on Friday, posting a weekly decline as investors grappled with a fading Middle East risk premium alongside uncertainty about a potential peace deal in Ukraine. Gold prices eased as investors booked profits from the previous session's record high. Prices shattered 2-week records as uncertainties surrounding global economic growth and political instability underscored investor appetite for bullion. Well, for more on markets, Chad Padowitz from Talaria Capital joins me now. Great to see you, Chad. So we saw on Friday US markets, the major indexes ending in the red. What happened there?
Yeah, well, look, it was a combination of, obviously, we've had for quite some time a very strong market driven by a lot of momentum and broadly optimism, which was broadly supercharged by the Trump election. So you did see some weakening earnings. Walmart had slightly weaker earnings the day before. You had inflation expectations, as you mentioned, have been sort of drifting upwards. You had PMIs and services indices, expectations disappointing. So all of that against an expensive market led, to quite a ripe appetite for some profit taking.
And so I suppose you have made some notes about the end of 2024, the S&P 500 only ever being higher 5 times in the last 70 years. So what are we seeing at the moment?
Yeah, so look, valuations are quite extreme, as you mentioned. Over the last 70 years, only 5 times has it been this expensive. It's certainly because this year started out quite strong as well, so that has only gone up further. So the market is a very expensive market with a high level of expectations of earnings over the next couple of years. And that's why any dent to that expectation or delivery thereof does leave it quite susceptible to to some weakness, just like we saw on Friday.
And the vast majority of S&P returns were driven by margin expansion. So what could we expect going forward?
Yeah, so the majority actually was driven by PE expansion. So the earnings themselves were not that strong. So the S&P 500, it was sort of mid-single-digit earnings, but the total return of over 20% was the PE expansion. So people paying more, or investors paying more for the same level of earnings at the equal weighted index. So if you take away the concentration issue in the market, there actually was almost no earnings growth. So the entire returns were driven by PE expansion. So that does show that there was certainly a level of economic weakness last year, but from the market point of view, that was masked by a PE expansion, which ties into the earlier comment of why we do have such an expensive market. It's because of that PE expansion.
So on Friday, we had some US economic data, the report showing that business activity nearly stalled in February. Have you had a chance to have a look at that report? And if so, what did you think?
Yeah, briefly looked at some of the data on that. The services industry was probably the more interesting one. So that tends to have been a bit better, and it's usually been the manufacturing side that's been on the weaker end. And because the US, like most developed market economies, are more services led, those tend to drive the economy if that does better. That was quite weak. House sales, the housing data hasn't been very strong. So it does show that the economy, there's certainly a fair amount of market optimism about the economy, but the data is showing somewhat consistent to what would be expected post a long interest rate rising cycle, which we have ended. But there is a delayed reaction to that in the economy, which tends to go for a couple of years. We're still in that process. So I think the data is actually consistent with what you do see where we are in the stage of the economic cycle. So it wouldn't surprise us if there are further downgrades and weakness ahead of us.
The Fed has flagged rising inflation risks, particularly around Trump's tariffs and the uncertainty that remains there. So how do you see this playing out over the next few weeks and months with investors kind of sitting on the sidelines awaiting confirmation?
Yeah, look, we don't. Tariffs are just one part of many things to consider when investing. So we don't think it's the be all and end all. It does seem to be at the moment somewhat of a negotiation tactic. So we'll just see where that goes. It's not something that I think is the primary driver. I think it drives the conversation about negotiating other things that is important in the Trump administration. But we'll see, because they have kept delaying, and then it's back and forth a lot. And I don't think it probably doesn't help one to overly focus on every announcement on that, because it does seem like it's going to chop and change quite some time before actually get some resolution.
And we're focusing on a stock, Everest Re. What can you tell me about this one?
So Everest is a reinsurance business, and just if I step back a second, given some earnings downgrades, some weakening in the economy, as I mentioned, and some high valuations, it is interesting to look for companies that are less economically sensitive and have valuation support. And a company like Everest, which is reinsurance, so what they do is they effectively help insure the insurance companies, and they've got a very good long track record. Their return on equity is north of 15%. They trade on around 7 times the earnings, market cap about $15 billion, and their book value is around 1 times actually. So it's trading about $334. Book value is about $340. So you're paying less than book value for a double-digit ROE with a very long track record of delivery. So that's a company that we think has a significant upside and would do well in a more tougher economic and market environment going forward.
Is that what you're focusing on, I guess, given the geopolitical events, that you are hoping to find companies like that can kind of ride the wave?
Yeah, look, we bottom up. So we're looking at individual companies' fundamentals, and that's what drives the investment proposition. But certainly we do look at the economic environment, and the economic environment, if one looks at history, while we cannot forecast the future, it tends to be a relatively difficult one where we are now in terms of downgrades, in terms of expectations not being met. So in that environment, we do definitely want to find companies that we think are far more resilient against that backdrop.
And what else will you be focusing on this week, keeping an eye on that you think investors will be as well?
Yeah, look, we don't invest in Nvidia, so we're not going to specifically focus on that. But I think from a market point of view, that's probably going to help drive sentiment at the broader market. I think it would be I think that's going to have an impact. I think what'll interesting to be is whether Friday's mini sell-off, if that continues, what happens to momentum, because momentum does drive equity returns, and it's a very good factor. However, when it turns, it can be quite ugly and continue for some time as well. And the momentum factor did very poorly on Friday. So just sort of on a shorter term view, it will be interesting the next couple of days to see if that gets some momentum the other side. But for ourselves, and we just bottom up stock pickers, and we're looking at individual companies' results that are reporting and go from there.
Chad Padowitz from Talaria Capital, great to see you on AusBiz. Chat to you soon. Well, getting one final check on where the local market is set to open when trade gets underway. SPY futures are down 64 points. Well, that does it for this edition of The Global View. Stick around, the open is coming up next.